There you go.
Hi, everyone. We're just going to give it a few more minutes to let additional people log in. So we'll start in just a couple minutes. Okay, maybe we should get started, Heather. We have 42 or 41 participants. Yeah, welcome everyone.
Okay. That's a good amount to get started. All right, hi everyone. Thanks for joining us today. Welcome to Accounting Systems for Government Contractors. We're slowly getting more and more people joining, so I think we're gonna have a good turnout today, and we're excited to share our knowledge with all of you. My name's Heather Amick, and I'm a supervising senior accountant with SingerLewak. I've been working as an accountant with companies who contract with the federal government for the past 6 years. And I'm also serving as a treasurer of the NCMA San Fernando Valley chapter, and I'll be moderating and presenting a little bit today. So next, I'd like to introduce the other ladies that are here on our panel. First is Andrea Roschke, CPA. She's a partner at SingerLewak in the Business Solutions Group and also has many years of experience with accounting with government contractors. She's currently serving as the president of the San Fernando Valley chapter of the NCMA. Next is Kim. Oh, hello. Next is Kim Wall, CPA. She's also a partner at SingerLewak in the Business Solutions Group, and she has a specialty in accounting for government contractors. So welcome, Kim. Thanks for being here.
Thank you.
And finally, I'd like to introduce Renee Meredith. She's the contracts manager at Rantec Microwave Systems. They're a small business manufacturer of navigational antennas sold to prime and subcontractors, primarily to the Department of Defense, MDA, and NATO. Renee is the president-elect and secretary of the San Fernando Valley chapter of the NCMA. So hello, Renee.
Hello.
Thanks for joining us. Before we get started, we have a couple housekeeping items that we want to go over. We want to remind you all that today's webinar is being recorded. So right now, make sure that your microphones are muted so we don't have any background noise showing up. If you have any questions or technical difficulties while we're having the webinar, you can post in the chat, and we're going to be monitoring that so we can address the questions as we have time and also help you if you have any issues. If you have any other questions, I think there's the chat, and then there's also another way people were posting last time too. I think there's a Q&A section too. So either way works. We're also going to be issuing CPE certificates today. There is one requirement though. You have to be in the webinar for 50 minutes in order to meet the time requirements for the CPE certificate. And we'll be sending those out in a follow-up email after the webinar. So I think I covered everything. Is there anything else, Andrea, Kim, you can think of?
No, someone asked about the slides, and we will also send the slides out along with the CPE certificates.
Yes. And the slides are really helpful. We're going to provide some really helpful links to different websites that will help you get going on your accounting needs. So, all right, next. Today on the agenda, our presentation is going to go over an overview of government contracting, key features of accounting systems for government contractors, components of an effective accounting system, NCMA involvement and audits, and we're going to provide several resources that are very helpful for us and which we think will be helpful for you. And at the end, we're going to leave time for Q&A. So like we said, you can ask questions as we go, but if you want to, you can wait till the end and ask your question at that time as well. All right, so first for our overview, we just want to give like a quick overview of the types of contracts, key regulations and standards, common accounting and financial challenges, and the importance of accurate and compliant accounting systems before we dive into like more specifics to provide you guys. So the type of different types of government contracts, I mean, there are several, but there are three main ones that we usually deal with. The first is firm fixed price contracts. Those contracts have a set price that's not subject to any adjustments based on the contractor's cost experience. And it's just a fixed price. It's usually laid out. Sometimes it's in different sections of deliverables, and it's a set price no matter what the cost is to you. The second type of contract is cost plus fixed fee contracts. And in these contracts, the contractor is reimbursed for all the allowable costs incurred during the performance of the contract, plus an additional fixed fee that is agreed upon at the outset. The third type is time and materials. Those contracts provide for the payment of labor and materials based on the actual time spent and materials used. And they're often used when it's not possible to estimate the extent or duration of the work. I did also want to mention like types of contractors. So there's prime contractor and subcontractors also. A prime contractor works directly with the government, and the subcontractor works under the prime contractor. Prime contractors are responsible for ensuring the scope of work is met, and subcontractors work under the prime to complete a specific area of the project that needs their expertise. Subs do not work directly with the government, but they work for the prime contractors. The key regulations and standards can be found in FAR, DFARS, and CAS, which I am going to skip to this slide. So the government outlines for you what it's looking for, which is really great. We provided a link here, which we'll be sending out to you. So the DFARS, in summary, tells you what an acceptable accounting system is. So what do they want you to have in your accounting system? What do they want to see? So they want it to be applicable laws and regulations. They want the accounting system to be reliable. They want the risk of misallocations and mischarges minimized. There's also more information on that link, but we'll be going over that in a little bit more detail. The next one is called CAS, or Cost Accounting Standards. And that is, I'm sorry, I have the cost accounting standards require certain contractors and subcontractors to comply with the cost accounting standards, to disclose their cost accounting practices in writing, and to consistently follow their disclosed cost accounting practices. There are certain contracts that are covered under CAS, and there is a flow chart that they provide so that you can go and check out the flow chart to see if these cost accounting standards apply to your company. There are some exemptions, so some companies are exempt. For example, contracts that are issued that are less than 7.5 million, and some firm fixed price contracts are exempt.
Heather, hold on one second. So it seems that some people are not seeing the slides.
Oh, really?
Because I can see them.
Yeah.
Maybe by a show of hands.
I see them
I
too.
see them.
I'm not.
Oh, so some people can see them. Okay, so if you can't see them, you may have to agree to the recording first, right? Or so okay, it
It
seems
could
that
be
most
maybe
people
that you
can
have
see
to
them.
agree to the recording.
Yeah, so see if there's a pending question about agreeing to be recorded. So, okay, it seems like most people could see them. I just wanted to double check. Thank
Oh,
you.
good. Okay, no problem. Okay, where were we? CAS. Okay, I talked about that. So next, we wanted to talk about some common accounting and financial challenges that you may come across. One issue is compliance with regulations. Contractors must adhere to strict federal regulations and guidelines, and those can be found in FAR and the CAS that we just talked about, which we will go into more detail on those. The cost allocation, you want to make sure to properly allocate your costs to the contract. Contractors need to ensure that the costs are accurately assigned to the correct projects and the indirect costs are appropriately allocated as well. Oh, there's some more people coming in. Cash flow management could be another one. Managing cash flow can be challenging, of course, for any company. And normally, as long as you're getting your voucher submitted to WAF on time, you're doing a regular timely submission of your vouchers, the government does turn around payments pretty quickly. Generally, they don't hold on to payments. They want to pay you as quickly as possible, but sometimes getting going can be a little bit challenging. Another challenge could be audit and reporting requirements. Contractors are subject to audits by various government agencies, and preparing for and responding to audits requires meticulous record keeping. So we're going to go over that in a little bit to give you more information on that. Pricing and profitability, determining the right pricing strategy while ensuring profitability can be difficult. So contractors must balance competitive pricing with the need to cover costs and achieve reasonable profit. Risk management, identifying and mitigating financial risks is essential. Contractors need to anticipate potential cost overruns and changes in project scope and other uncertainties. And one of the last ones is contract modifications. You want to be able to handle contract modifications and changes in scope, and that can impact your financial planning and accounting. So you must be prepared to adjust your budgets and financials when those contract mods come through. And you want to be sure to accurately review your contracts when they're awarded and when you get the modifications, because those can really impact how you're recording your financials. Some contracts can be broken down with CLINs, SLINs, ACRONs, and they want you to track by each of those allocations. And you want to be sure your accounting system can do that for you, because one little thing could have a ripple effect and cause you a lot of headaches down the road. And we definitely don't want you to experience that. Righty. And I think, Andrea, is this your slide?
Yes, I'm going to take
Okay.
over from here to talk about our
I'll
friends.
hand it off to you now.
Thank you. Our friends at the DCAA. So a couple of you have your hands up. I think that was in response to our question about whether you could see the slides. But if you have questions, feel free to put them in the chat or the Q&A section. So I'm going to talk a little bit about the audits and the importance of audit trails and documentation. I mean, that's the three most important things about audits are document, right? You have to make sure that a third party coming in can follow the paper trail and tie everything out to the contract level. So just a little bit of history about the DCAA. It was established in 1965 because the then Secretary of Defense, Robert McNamara, decided that DoD contracts would be more effective and efficient if they were performed by a single organization. So in comes the DCAA. The DCAA.mil website has a lot of resources available intended to help contractors. So I know audit sounds scary, but you know, they really do want to help contractors comply with all the rules. There's a guide called, he was wrong. Okay. Yes, I get it. Sorry, there was a comment that someone said he was wrong about it being more efficient and effective, as we can see that sometimes it's not. There's a guide called Information for Contractors specifically that is a huge resource I've used for years. You can get a copy of it, of the DCA contract audit manual at that website. It prescribes the principles and policies the personnel who are engaged in doing the auditing use. So it's helpful if you have that and you can do a kind of a self-assessment or a pre-audit of your own organization to make sure you're ready. The DCAA major areas of emphasis are the business systems, management policies and procedures. Sorry, hold on. Accuracy and reasonableness of your contracts for pricing and incurred cost representations, the adequacy and reliability of records and accounting systems, and then their compliance with provisions having the accounting or financial significance, such as the cost principles, which is FAR Part 31, the CAS clause, which is FAR 52.230, and the Truth in Negotiations Act, which is FAR Part 52.215. So, the extent of their involvement is determined by the type of contract that will be awarded. As Heather indicated at the beginning, most DCA efforts on firm fixed price contracts take place during the proposal stage. So you can see in this little chart here, the pre-award stage. The reverse is true for cost type contracts. Those are going to be audited throughout the contract and at the completion of the contract. So a pre-award accounting system survey is an evaluation of a prospective contractor's ability to perform a proposed contract. So prior to the CO requesting a DCAA audit of your accounting system, the COO will ask you to complete the pre-award survey of the prospective accounting system adequacy checklist. So you can see we have a link to that. Doing a self-assessment of your accounting system is helpful because you can document how your accounting system meets the criteria or know if there are shortfalls. Kim is going to go into more depth on that when she speaks in a little bit. But some of the main provisions are that are required in a accounting system that is meets the criteria are proper segregation of direct costs from indirect costs. Indirect costs. The direct costs are defined as anything that can be specifically identified with a contract. So an example would be labor, specifically identified to the contract, or materials purchased specifically for a contract. Indirect costs aren't identified with any single effort, but could be over several contracts. So an example would be putting the lighting in the manufacturing area that houses the work of several contracts. So those types of costs are put into an overhead or G&A pool that then gets allocated to the contracts on an equitable basis. So identifying and accumulating the direct costs by contract is an important aspect of the accounting system, and Kim is going to go into further detail on that as well. There needs to be a logical and consistent method for allocating indirect costs to the contract. So again, if you have things like rent or utilities or indirect labor that need to be spread over the cost of the contracts, you have to have a logical and consistent method for doing so. You need to accumulate the costs under general ledger control, which means that your job cost ledgers have to be able to be reconciled to the general ledger. A timekeeping system. I know Renee told us she's just going through this as well, and Kim is going to touch on this as well, but you must have a system that identifies employees' labor by final cost objective. And last, I'm going to talk a little bit about unallowables. You must also segregate costs that are not allowable pursuant to FAR Part 31. And the FAR does identify some costs that are expressly unallowable, like bad debts, contributions or donations, entertainment. That's just to name a few. So in addition to the accounting system, they may come in to audit a proposal. So just to make sure you have adequate documentation. Again, it's a paper trail for your assumptions used. In the information for contractors manual on the DCAA website, they give some very good models to use for proposals. So if you're putting together, we had an earlier webinar about putting together proposals, but I find that their models are helpful in putting together something that makes sense and the DCAA can audit easily. So the last area I'm going to touch on is related to incurred cost proposals. So if you have cost reimbursable type contracts, you have to submit a report every year to the government called an incurred cost proposal. And this submission includes the direct and various indirect costs and the rates incurred by the contractor during the year. So it includes the indirect cost pool and base costs used to calculate rates, and a summary of the cost incurred by contract, a supporting schedules, and a certificate of final costs where you're certifying that the costs are correct and allocated properly. So, and they're required, like I said, under flexibly priced contracts. And I know I sound like a broken record, but the DCAA.mil website provides some really helpful information. There is a checklist area on the DCAA website called the ICE model, which there's a link to that. And it's a model of the incurred cost proposal in the information in the format required by the government. And there's also a printed out example in the information for contractors guide. So the report basically lays out your direct costs, your indirect costs, and it reconciles for the government. You're showing the government that you've reconciled your costs to your books to the contracts. So it's a multi-page report. It can be quite complicated. There's a lot of macros involved in this ICE model that you can download. If you set it up properly, it could be a really useful tool, but if you get lost, please be sure to reach out and ask for help. We've done many of them, and so we can help you get started if you've never done one, or if you've created one and like us to do a pre-review of it, we're happy to take a look at it. So that is it for me for now.
All right, so next is Kim. We'll hand it over to you.
Thank you. Okay, so next we're going to talk about the components of an effective accounting system. And I apologize, I've been fighting this cold for 2 weeks, so I'll do my best. Any of you that are starting out in accounting for government contracts, or for any of you looking to change accounting systems, it's very important to get the setup done correctly from the beginning. We should note that your accounting system can be maintained in a software program that is fairly simplistic, like QuickBooks Online, or you could be using a relatively complex program like maybe Uninet or CostPoint. We've had clients with government contracts successfully use QuickBooks Desktop, QuickBooks Online, Uninet. So we have experience with all levels of that. But no matter which accounting program you utilize, the setup of the chart of accounts, the contracts, and the employees at the very beginning is incredibly important. To start, based upon your business, you'll want to determine what pools will be needed to properly account for your costs, so the pools can be grouped together on your chart of accounts. The balance sheet setup for clients with government contracts is very similar to most companies, but the chart of accounts income statement portion is a little more, I use the term rigid. So at a minimum on the income statement portion of the chart of accounts, we frequently see account groupings for direct costs, overhead costs, general and administrative costs, fringe costs, and unallowable. Like Andrea mentioned, we want to keep those separate. So those categories are usually what the chart of accounts is arranged in. So while working on the organization of the chart of accounts, you also want to determine how the contracts that you have will be organized along with the internal numbering system for your contracts. And it could be anything that makes sense to you and your company. We've seen clients use different prefixes based upon the type of contract or the year the contract started or whatever is best for you and makes sense to you. You'll also need to determine at this point the level at which each contract needs to be accounted for. Can you stop at the Akron level? Do you need to account for the Akrons and the SLINs? Or what else is in your contracts? Because you want to set up the capabilities for that at the very beginning. Okay. So next, it's important to have employees properly set up in the accounting and/or timekeeping system. Each employee has to be able to track their time by job and/or indirect cost pool. Time cards should be signed by employees, and electronic signatures are fine now. In the old days, they weren't, but everything's good now. And they should also be approved by a supervisor. And all these are things that if the DCAA comes in and does an audit, they will look for you to prove to them as happening. So also know with the employees in the system, it's best if the employees are only allowed to utilize charge codes on contracts and indirect pools that they're authorized on. It'd be best that all employees don't have the ability to charge anything unless they truly are meant to do that, because inevitably the employees make a mistake. Inevitably a supervisor misses it and doesn't realize it. So there's a lot to undo. So we just try to advise everyone, limit the employees to only be given permission to charge the codes that are applicable to them. So all those things we've talked about are important because the accounting system and cost data, as I think both Heather and Andrea have impressed upon you, need to be reliable, and the risk of misallocations and mischarges needs to be minimized. So additionally, direct charges to contracts need to be consistent with what is allowed by the contract and the invoicing that will take place. So Andrea mentioned some of these, but if we have everything set up well, some of the other things we'll have is the identification and accumulation of direct contract costs by contract will be achieved. The reconciliation of the subsidiary cost ledgers and cost objectives to the general ledger will also be achievable. The labor distribution system will charge direct and indirect labor to the appropriate cost objectives. The system will have the information available to readily calculate your indirect cost rates, which it's important to do throughout the year. So you just want to make sure you get your system set up properly at the beginning so you have all of this available to you. Those are just some of the requirements of the accounting system. And circling back to where we started, in order to be able to meet those requirements and objectives, we need a good, clean setup. So with all of the above, you'll have the ability to properly track costs, which is also crucial to preparing the billing on a contract. If you have CPFF contracts, you'll be able to track all the direct costs for the current period being billed, as well as the cumulative costs to date. Now, for fixed price jobs, as everyone has said before me, most of the work is done on the front end, and billing isn't as directly related to the costs incurring, but you want to have everything allocable to your fixed price contract so you know if you're making a profit or not. You've got to know how to price the job. If something's not going well in the future, you want to learn from your mistakes. If something's going well, you know that you've got a good budgeting system in place. So now I have an example of the impact of the lack of a good accounting system can have. So I'll share with you the following scenario. Several years ago, we got a call from an attorney because he had a client who was new to government contracting and prepared vouchers on a CPFF contract. but the client didn't have an adequate accounting system in place at the time. So what his client did at that time was he estimated the costs that he included on that CPFF voucher and submitted it to the general government. So then what happened was the client got audited, and it turned into a deep dive with criminal charges filed against the contractor for fraudulent reporting of costs. So we were brought in to try and support what he had presented on the voucher that he had submitted, and there had been more than one, and had to attend a meeting with the U.S. Attorney General, with the attorney and his client and everyone else. So the moral of the story is we can talk as much as we want, but have your system in place, have a good system set up before you start working on these government type contracts. It will benefit you. So now let's talk briefly about the accounting software that is available. As I said earlier, we've seen clients with anything from QuickBooks Desktop to Uninet. With the less sophisticated software, it can be utilized, but there's a lot more work needs to be done outside of the program. For example, as Andrea mentioned, it's important to keep track of the burden rates a company is incurring throughout the year. If you're utilizing one of the simpler programs, the calculations usually need to be done outside the program. And unfortunately, those are the kinds of things that maybe don't get done often enough if it's a manual process outside the program. Another example, in some of the less sophisticated programs, it's possible to code something to a direct expense without coding it to a job. So if that happens often, it's a lot of work to sort out later. So these are all just things to be aware of. The systems don't have to be overly sophisticated, but you need to have your expectations set accordingly and be aware of some of the pitfalls you need to watch out for. So another thing to consider is the importance of your accounting system being ready for the audit. And Andrea talked briefly about that. It could be a system or rates audit or both. There's different agencies that do the audits. So the audits can be handled differently. Some of the governmental agencies are contracting with individual accounting firms to do the audits rather than the NCMA. So audit experiences can be very different. So again, your best course of action is just to be prepared. So having said all that, we're here at SingerLewak, and we have experience with helping clients set up and maintain their accounting systems. And again, if you have questions, please feel free to reach out to us. We're happy to try and help you wherever we can. So I think that kind of summarizes where I was, and I think we're going to go back to Andrea now for audit objectives.
Yes, so those of you who have attended some of our prior webinars know we have the good fortune of having Bill on our board, and he is the director of contracts with NCMA. So what I really enjoy about our NCMA group is that we get to see all sides of the situation, because Bill Foster, the director of contracts, he tells us from a government side, and then we have Renee from the business side, and then Kim and Heather and I we cover the accounting compliance side. So he couldn't be here today, unfortunately, but we love having him involved. He always adds such insight from the government side. He did send us a slide or two, so I'm going to attempt to speak to it, but nowhere near as eloquently as he does. So the FAR governs all the procurement processes within all federal agencies, but the DFARS, which is the Defense Federal Acquisition Regulation Supplement, is an extension to the FAR that focuses specifically on contracts with the Department of Defense. So the DFARS adds an extra layer because we don't have enough guidelines, right? So it's tailored to defense-related contracts specifically. So it's important to note that if there's a discrepancy between FAR and DFARS in a DoD contract, the DFARS provisions takes precedent. And what Bill was telling us in this slide is that the NCMA also has in the DFARS, there's a section called Accounting System Administration. And it also outlines the criteria for acceptable accounting systems for contractors. And not surprisingly, the criteria and the requirements are similar to the FAR Part 31 provisions. But some key points from their DFARS section 252-742-7006C, which Bill points out on his slide. Some key points from paragraph C are in the internal control environment. So that means the system must provide a sound internal control, accounting framework, and organizational structure. Again, the cost segregation, the proper segregation of direct from indirect cost is required. Cost identification. You can hear the similarities between the FAR and the DFARS here. The system must identify and accumulate direct costs by contract. And then the indirect cost allocation, the same thing, logical and consistent method for accumulating and allocating indirect costs. General ledger control, reconciliation, you must be able to reconcile the subsidiary cost ledgers to the general ledger. They do mention adjusting entries in their paragraph. Approval and documentation of adjusting entries are necessary. And then management reviews. So regular management reviews or internal audits of the system must be conducted to ensure compliance. The timekeeping system is similar to the one in the FAR, and the labor distribution system. So I think the main differences between the DFARS and the FARS is that the DFARS rules are more focused on the operational side, where the FAR provides broader cost principles, and the CAS 52 part deals with the text and implementation of provisions and clauses. So the DCMA and the DCAA may conduct their audits separately. So how many audits can one company have? A lot, apparently. But they often collaborate and share information. So they hopefully won't hit the same things from separate agencies. So let's see, what else did I want to mention about that? So when the DCMA comes out to examine, they would look more likely focus on the system processes, the controls, and then when the DCAA comes in, they'll come in and look more at the dollars and the costs. So that's the main differentiation between the two. And I think that is it for the DCMA involvement.
And we have helped some clients with DCMA audits. So, and they really do, they will make you show them from, the time entry all the way through the whole entire process until you receive the fund. So you need to be able to show that whole flow, and they'll look at one specific person on a specific day. So it has to be that detailed. All right, next is Renee was going to tell us a little bit about NCMA and how to join.
Yes. Can everyone hear me, or can you hear me?
Yes.
So I'd like to speak a little bit about NCMA and just the invaluable resources available, including tier learning opportunities with accredited certifications. As a member, you'll be part of a community where you'll be able to stay ahead of the industry trends and really be part of a network. The regular membership for full-time is $170, and if you're a new professional, you can join for $110 per year. There are a lot of benefits. One of my favorite benefits is the collaboration, which is basically a resource that's available to members only, where you would go in and either pose a question or something that you're having trouble with or need more further clarification, and your peers would go ahead and answer. Or you can also just search past conversations on a certain topic. Let's say the hot topic right now, tariffs. You could go out there and just see how other people are dealing with it. So I really enjoy that aspect. There's free webinars that are available, and also monthly magazine that comes out every month. The other great part of it is if you join, you can join your local chapter. If anybody's local, we'd love to have you at the San Fernando Valley chapter. We are always looking for volunteers, which is also a good way to increase your knowledge in government contracting. So I think that's about it. There's some great resources here. If anybody's interested, a lot of good information on all these websites. I think that's it.
Great. Thank you, Renee. I think,
There's one question in the Q&A.
oh, okay.
About how to calculate your rates, right? I think that was the question.
How to calculate burden rates.
Right. So that's a very good question. And it's I'm going to pull up. Is it okay if I share my screen, Heather? Will that work? You're muted.
Sorry about that. I'm going to stop sharing,
Okay.
stop presenting, and then you should be able to share.
Okay. So I know, can you see this model incurred price proposal?
Yeah.
Okay, so this is again from our favorite resource on the DCAA.mil, the information for contractors, and this is a model of the incurred cost proposal. But it basically gives an example of how the rates would be calculated. And in this particular example, they have a G&A pool, they have an overhead pool, and they have an occupancy pool. So the pool is, and if you can move back and forth in the macro enabled Excel, you can move back and forth between all of these schedules. So if you click on Schedule B, it will bring you to Schedule B. But basically, you list all of your expenses. So in the general and administrative pool, there's going to be expenses like admin salaries and maybe rent for the offices. Trying to think of what admin, office supplies. Okay, someone said they're not seeing the screen, so
I can
see it.
Yeah, I
okay.
can too.
Okay. So again, you may have to agree to be recorded to get the full example, but okay. So so that's the G&A pool that we're going to spread over the base, and the base is usually for G&A, it's going to be all of the direct costs in the contract. So it's going to be direct labor, direct materials, and overhead. Then you take that base and you get a rate for G&A. So in overhead, it's a smaller base. It's usually just on the direct labor. So this is an example of how rates are calculated and then applied to the contracts.
Hey, can you hear me?
Yes.
Hey, thanks. I'm sorry to interrupt you.
That's okay.
What exactly we gotta, when you said QuickBooks probably requires us to do this outside. Most of the stuff we do is all firm fixed price, but we're going to get into cost plus contract. So I need to understand this. Okay. And what exactly is in pool?
Sure. So in the G&A, let me go back to Schedule B and see. It's going to be your actual costs of your, here's an example. I don't know if you can see it. It's kind of small.
Yeah.
So it would be anything that's in the general and administrative expenses category. In this particular, yeah. So we have.
So you're talking about that includes like executive salaries and vacation and sick leave. Is that what I see down there?
Yes. Yes.
Life insurance.
Right.
Okay.
Right.
Okay,
and overhead is going to be, the overhead expenses are going to be the items that support the direct costs to the contract. So say you have an employee who charges directly to the contract, that employees like payroll taxes and indirect labor like PTO and vacation goes into the overhead expense pool. Some companies just have one rate, but many companies break it out into, 2 or 3 or sometimes 4 rates.
Can I get a copy of this when we're done?
Yeah, actually, the link in the notes, in the slides, will bring you so dcaa.mil, and then look for the information for contractors. This is a really good guide that has all kinds of tools. This is the manual.
Okay.
So that's been really helpful for us for all of the years we've been doing this, and preparing the incurred costs proposals and doing the spreadsheet. And also on the dcaa.mil website is an example of the ICE report where you can use those macros and enter your actual information in to calculate rates.
Okay, let's go down to that schedule we first looked at, that where I took the word pool out of.
Okay. Hold on, I'll see if I can find it quickly. I'm gonna try. I hope I'm not making everyone seasick here. Okay, this one.
There it is. Yeah. Okay. So pool is, I'm going to say that's vacation time and executive salaries, and then base is electricity and water and rent.
No, the base. The base is going to be the direct costs.
Oh, direct costs
and overhead in the G&A situation.
And overhead.
Yes. For overhead calculations, you're going to have your direct labor is the base, and the overhead expenses are in the pool. That's how you get your overhead rate. Your G&A is applied to all costs, all direct costs and overhead. So that's why the base is bigger.
Okay.
Clear as mud, right?
Yeah. Okay, well, we have a link to this picture, so that's good. Okay.
Yeah, there's a lot of resources available, and yeah, if you have any questions, feel free to reach out directly. At the end of the slides has some contact information.
So these are things that are going to be audited if we do a cost plus proposal and
right.
have all those numbers in it. They're going to come look at this stuff. Is that what I'm hearing?
Yes. Correct. They're going to read.
Are all proposals audited like that? All cost plus proposals audited, or just certain ones?
Well, there's really not all of them are audited, but the incurred cost reports are always due. There's some that are looked at and some that are not. I think one of the participants alluded to the fact that the DCAA isn't very efficient, and sometimes years go by, and they don't look at it. But sometimes they do what they call a desk audit, and they just look at it for reasonableness. And sometimes they do several years at once. But somebody eventually will look at this report. And probably the first time you do a cost type contract, you're going to have some involvement from the DCAA. I would expect that.
Right, because you on a CPFF contract, when you're billing this year, for instance, let's say you're billing 2025 costs, you should be using a provisional rate in those to bill on those contracts, and the provisional rate needs to be submitted to the DCAA for approval before you should be using it. So there's several times that you need to have your rates calculated, and at least twice a year that you submit them to the DCAA. One is the provisional rate request, and then at the end of the year, 6 months after the end of your fiscal year, you file your ICE report, which is a recap of the actual incurred costs and the actual incurred rates, which also needs to be approved by the DCAA. And generally, there's a little back and forth once you submit those. So it doesn't just get rubber stamped. It doesn't mean it's fully audited every time, but there is generally some back and forth as you're trying to get those final rates approved.
Okay. Thank you.
Anything else? We've hit our almost hit our 50-minute mark, but we have time for some Q&A if anybody else has any other questions. Heather, do you want to bring back up the information screen?
Okay, yes, I will. There's Dave has his hand raised. I don't know
Well,
if
that
that's
was
who just spoke.
Yeah, we were just talking to Dave.
Okay.
Let's see, he has another question.
Danielle has a question.
Yes. So I am a part of the Apex Accelerator program, and I wanted to know, like, when companies come to us and they ask us questions on like what accounting systems they might want to use or that are preferred, are there the ones? Were there some listed in here? I was able to see the slides, but they were a little blurry. So I know that we're going to be able to see them later, but I just wanted to know, like, were those some preferred ones in there?
I mean, I think the DCA doesn't usually recommend any particular program, but in our experience, for smaller contractors, QuickBooks can work, QuickBooks Desktop or QuickBooks Online. It just has to be set up properly. So, you know, advising with a professional that can help you get the book set up to be compliant with the DCA requirements. For smaller companies, it's perfectly acceptable. Other programs that we've seen, there's one called Uninet. And then Deltec is for a very robust program for big contractors, but they have a smaller business version available called CostPoint. Renee, that's the one your company is using, correct?
Correct.
So yeah, there's not a lot of you know, the DCA doesn't like to make recommendations, but they we can tell you they have passed. And then there was a question from Katie. Do you suggest that we outsource for at least for the first 3 years till we get a good handle? I mean, having somebody consult with you is a very good idea to keep you out of trouble. It's much easier to have an expert come in at the beginning and just set the foundation with you versus coming in later to clean it up. We've done both. You know, Kim gave that example before with the contractor who ended up in federal criminal court. And then we've come in, you know, a couple of years into a contract with the Department of Energy. We basically had to throw out the QuickBooks version they had and start over. So having somebody in the, you know, it's kind of like a, you know, foresight to have it at the beginning, spending the money at the beginning versus having to clean it up. It would be a lot more efficient to do it at the beginning. And then, yes, Abraham, you said an audit depends on qualitative and quantitative risks for being selected. Yes, we have received some of those where they've called them, yeah, they just kind of, it almost is like a rubber stamp, right? But they do look at it and decide whether it requires having a full-blown audit or not. See if there's another Q&A in here.
Yeah, there's a couple Q&A questions that popped
Okay.
up.
Okay, so do you do for multi-year contracts, is the percentage of completion of method of accounting required? Not for DCAA purposes. I mean, I think so. You know, we talked a little bit about it on a previous webinar about the differences between GAAP and government contract accounting. So I don't think the DCAA requires completion, the percentage of completion method, but you might be required to do so if you're doing GAAP financial reports. Okay, then what else is here? Sorry, I'm looking. Can you ask for an audit? Well, no, unfortunately, you can't ask the DCAA to audit you. We've tried that in the past because we kept going around in circles with a request for a accounting system report, but you can't request it yourself from the DCAA. So we went back and forth between two different agencies. Only the CO or another or the contractor can request the contract manager can request the audit. Let's see, and then Mike has a question. My firm is prime and 100% fixed price to the government. We use QuickBooks. Do firm fixed price contracts ever get audited? Typically not. I mean, they usually do a systems audit for the firm fixed price because they just want to make sure that you can meet the, you're not going to go out of business basically, right? So they want to look at the proposal and make sure it's reasonable and the pricing is reasonable. Something better than QuickBooks that involves detailed line items. I think that would probably be Uninet or CostPoint. Is that, do you agree, Kim and Renee?
I agree.
Yeah, I agree. But just to let you know, that's a big jump.
Yeah.
So it's a good jump, but that's a big jump from QuickBooks to there. There's a lot of implementation time and costs involved. Again, well spent money as long as it's within what your requirements are. But it's not something you do in a week. That's all I want you to be. Because I had a client call me and say, okay, we bought Uninet, we're switching. And I said, okay, we probably should have talked about that a little bit first.
The soap in the box that it works, right?
And the entire full implementation to get them fully implemented took about 9 months.
Yeah.
So yeah, but they love it. So it's well spent time and money as long as you know what you're in for.
Lynn put in a good point about the auditing of progress payments on a firm fixed price contract. So you can negotiate progress payments into your firm fixed price contracts, but they do sometimes audit. The progress payments are typically related to costs spent, right? So you could have a firm fixed price contract and you have the ability within the contract to bill the government as you hit certain milestones or as you spend a certain amount of money. So they do sometimes audit the progress payments. That's a good point, Lynn. Thank you.
And I think there's just one more, which is what we probably have time for. Is there a revenue limit below which DCAA does not go for an audit?
Yeah, I don't know that it's a revenue limit, but I think Abraham was kind of hitting it when he talked about the qualitative and quantitative risks. They look at probably a lot of different factors. I don't know. Yeah, I mean, basically, some of the things I remember from the incurred cost, like what percentage of your business is with the government? Do you have a lot of government contracts versus commercial? So there's one of the pages of the incurred cost proposal is basically indicating the risk to the government by how much your total revenue, your government contract revenue relates to your total. So it's less of a total revenue limit, more of a percentage of government that shows their risk.
All right, well, we're at the end of our hour, so exactly 1 minute left.
Whoa.
So I want to thank you all for coming. It was great having you. We really enjoyed presenting this information, and I'm sure many of you have questions, which is understandable, and please reach out to us. My email's here on this slide. As we mentioned before, we're gonna send an email probably within the next week with a copy of this presentation and a link to the recorded webinar and the certificate if anybody wants their CPE certificate. And I think that's it. And also, like we mentioned, the NCMA is very helpful. So please look into your local chapter. So we hope to see you at our next webinar.
Thanks,
Thank you so much.
Thank you all.
Bye.
Bye.
Thank you.